Hi, good morning. This is Miss Joanne, your accounts lecturer. So today we'll be learning about the format for Statement of Comprehensive Income. In short, we always call this as SOCI. Okay, so we begin with number 1 on what we see here. What are the elements inside SOCI? Remember, elements in the framework are like assets, liabilities, income, expenses, equity. They are the 5 elements. So it's very important to be very sure of what is the elements inside SOCI. There are 2 elements inside SOCI: income, expenses. So when you do deduct expenses from the income, we get profit or loss for the business. That is in short. Okay, so what we are learning today is what are the 4 short formulas inside SOCI. Okay, so the first short formula is number A, sales less cost of sales equals gross profit. Okay, so how does it relate to income and expenses element? Sales from the point of business are income for the business by selling either their products or by offering their services. So you will realize that sales are related to either income for selling of the goods or income for providing services. Less cost of sales. Cost of sales are expenses for the goods. In what it means is the cost of buying the products of the goods for the business to sell, all right, equals gross profit. Okay, so they look pretty simple. However, sales itself cannot be that simple as just sales. So we look at number 3 here, breakdown of each component. You can see here, sales less cost, less sales return, less discount allowed. That would be the sales that we are looking for. As in regard to our cost of sales, which is expenses for the goods, has to less discount received, have to add freight inwards, have to add duty import in order to get the cost of sales equals gross profit. Okay, let us repeat this again. Sales would be income for the goods, for selling of the goods or providing of services. Cost of sales is expenses for the goods. When we minus them, they become gross profit. So if we hear the word carefully, what we understand would be for a business who provides service, there would not be cost of sales. Why? Because there is no goods involved. Alright, so when there is no goods involved, there won't be cost of sales. There won't be any gross profit. Alright, so when trading businesses where business actually buy and sell goods, they would have sales, they would have cost of sales. Okay, so first equation is to find gross profit for trading business. For service business, because they don't have cost of sales and they don't have gross profit, what happened would be sales plus other income minus finance costs minus other expenses equals profit before tax. For service business, they would jump to the second short formula. Let me repeat again. Sales plus other income minus finance costs minus other expenses equal profit before tax. Alright, so for trading business, after you get gross profit, you will continue with the second short formula. Gross profit add other income. Now, the question would ask, why would you say other income? Because the main income for businesses would be the sales, which is providing of goods, sales of goods, or providing of services. Alright, that's why it's called other income. So we have to minus finance cost. Finance cost means cost of getting funds from the bank, for example. Alright, so interest expense is considered a finance cost. So only interest expense will go into finance cost. Minus other expenses. Why is it called other expenses? Because it's not cost of sales. Cost of sales is the main expenses, so to speak, for a trading business. For expenses not related to goods, it will be called other expenses. So equal profit before tax. Alright, second equation. The third equation will continue with profit before tax minus income tax expense equals profit after tax. Okay, and the fourth equation, profit after tax plus other comprehensive income. Okay, so the question would be, what is other comprehensive income? Other comprehensive income in your syllabus for Australian matriculation program only relates to revaluation of non-current asset. When there is a gain on asset revaluation, then you will add. When there is a loss on asset revaluation, you will minus. Then you have profit and loss for the year. Alright, so let's look at this again. Okay, the full breakdown of each component. Alright. Okay, so that concludes the video for this particular learning of the format. What we do next would be how to apply it to the question. So for those who have the manual, the textbook, where you go is you go to Unit 4, question 21, page 68, and we try to apply this particular question for our understanding as SOCI. Alright? Okay, so that's all for now. The next video will actually teach you on how to do balance day adjustment. Alright? So that's all for now. See you on the next video.